I think the opportunity here is the space is 2.5 trillion today. I think it's going to 100 trillion in line with other asset classes. So that's the biggest mega trade of all time and the largest generation of wealth in all human history. That's the trade. How you want to slice and dice that? Yeah, how you want to slice and dice that's up to you. What risk tolerance you have, but that's the trade. You know, when I first did the first piece of work on Bitcoin back in 2013, I said it was worth $1 million.
Yeah.
You know, and I don't think that's wildly wrong. You know, if Bitcoin's at $1 million, yeah, the space is somewhere close to my target of 100 trillion, or maybe it's 50 trillion. It doesn't matter. It's just gigantic.
In a recent interview on Empire with Raoul Pal, the discussion centered around Bitcoin's current status, the potential impact of the upcoming election on the crypto market, and future prospects for cryptocurrencies. At the time of the interview, Bitcoin was trading around $61,000, showing a 2% decrease over the last 24 hours but a 4% increase over the past week. Pal introduced his concept of the everything code, explaining its connection to global liquidity and the credit cycle. He argued that we are entering a period of unprecedented liquidity, which could propel risk assets, including cryptocurrencies, to new heights. Before we continue with the rest of the video, do check out Daily 5-Minute Crypto Newsletter with all the latest crypto and Bitcoin news. It's a fantastic analysis of on-chain crypto data and breakdowns, and the best part is it's absolutely free. They'll cover expert predictions, breakdowns of on-chain crypto data, and any breaking news you need to know, all in a nutshell. Click the first link in the description and enter your email to join over 50,000 others in becoming a better crypto investor right now.
Yeah, so very simply, something I call the everything code is from 2008, we had a global debt reset. Now, as opposed to letting go of all the debts, what they did was cut interest rates to zero and said nobody needs to pay interest rates. Okay, that was a huge advantage for the system, and everybody reset their debts for this 3 to 5 year sector. So then the debt refi cycle, when they have to refinance the interest payments and the debts, drive the business cycle. The business cycle's always been the credit cycle. So now it's become almost perfectly 4 years. The only other time in history it was perfect like this was back in the 50s and 60s after World War II and the financial repression then. So there's financial repression going on, but it goes in this 4 year cycle. The 4 year cycle happens to be the crypto cycle, the US election cycle. It's all the same thing. So it doesn't matter what you label it, but there is a cycle that's going on, and we're just coming into it now, which is we've now got $10 trillion of debt to refi. You have to refi the payments. Usually what they do is they inject enough liquidity into the system to pay for this, because there's not enough GDP growth to pay for it all. And so we go on to the next cycle. So that's really what drives all assets right now. Everything is basically correlated. But out of that, there's one asset that does a lot better because it's got the secular adoption curve, which is crypto, plus the macro tailwind of debasement of currency and the cycle. So that's where we are in the cycle now. Zoning into election year. Well, this is when they start giving out money. They also have a lot of refi to do. So it tends to be a very good back end of the election year. And then the following year tends to be very, very strong too. But this is a global thing as well. Every major central bank is refining their debts in the same cycle. The Europeans, the Japanese, the Canadians, the Brits, and the Chinese. Now, what you always look for in these refi cycles is who's the weakest link, because they're likely the ones to do the most stimulus. It's probably China this time around. Just came on the tapes just now. I think Felix actually just tweeted it out. There was a Bloomberg story that I've been talking about for a while, is the US and China have agreed to kind of help each other. They said, China's central bank says a meeting in Shanghai produced an agreement with the US Treasury to appoint contact people to deal with any future financial stress events. So they've got a dollar shortage. And what they're basically saying here is the Fed will get dollars to them. I think this is one of the reasons what Japan has been doing in the yen as well, because the euro-dollar market is driven through the Japanese banks. Yeah, I mean, I was looking at the 10-year bond rate, which is actually a big influence on the crypto price, bizarrely. And 10-year yields in China are at like 2.1% or something, and they just look like they're going to approximately zero. And we know this because this is the Japan playbook, right? When you've got an aging population aging as fast as that, you've actually lost control of your growth engine. So the natural rate of interest rates has to be much lower. And it shows you've got a debt crisis. And what we're seeing now is the flip side of everything that Dan's saying. So the flip side is people start cutting rates. You start easing conditions. Bond yields start to fall everywhere. The dollar starts to fall. That eases
the dollar is in a bear market now.
That's right.
And it just kicked off a few weeks ago.
That's right. Now it means it eases financial conditions for everybody. That drives the business cycle. As the business cycle picks up, people have more earnings, they invest stuff, markets go up, and that pattern has always gone on, the business cycle.
After hearing Raoul Pal discuss Bitcoin's current position and the potential impact of the upcoming election on the crypto market, let's delve into his insights on where Bitcoin might be headed and whether it could reach a $100 trillion market cap. Pal emphasizes the importance of understanding the global liquidity cycle, which he believes is entering what he calls a banana zone, a period marked by dramatic rallies for risk assets. He highlights various sources of liquidity, including potential shifts in Fed policy, government spending, and international financial dynamics. Pal suggests that this liquidity surge could extend into 2025, potentially pushing cryptocurrencies and tech stocks to new heights. Now, let's hear more from Raoul Pal on Empire.
Combination between governments and central banks. These are not separated entities anymore. So one group needs to refi the debt and add new debt. The other group has to make sure it's managed. See, liquidity in the US is Fed net liquidity, which is the Treasury General Account, which is the Treasury, which is the reverse repo, which is somewhere in between the Treasury and the Fed, and there's quantitative and the use of the balance sheet. So they're all three joined at the hip, and they manage that liquidity flow to manage this process. And Dan's right, because they know is once they start unleashing the spigots, then the reflexive buildup happens. And guess what? It generates capital gains. They get capital gains tax. It starts financing deficits. It's kind of, this cycle is the clearest I've ever seen macro in my life because it's so cyclical. Now, does that last forever? Probably not. But right now, it seems the most clear I've ever seen it. I mean, this is the simplest way I can put it is this is the biggest deflationary nuclear bomb we've ever been given. And people don't understand it yet. They're still arguing about, secular inflation in the 70s again. I'm like, are you fucking kidding me? You don't understand what's about to happen. Give a work per se.
Yeah.
I think it's like, because we're retiring a load of people that are going to die, we're replacing with more and more robots and AI. So you actually increase GDP growth. How it gets distributed, who the hell knows? We'll figure that out when it happens. But I don't think we're going to lose jobs yet. I think the next 10 years is probably about having superpowers where we can do stuff. I mean, basically, if you think about it, as the business cycle picks up, which it will, earnings pick up. Therefore, the events business picks up, which means sponsors spend more money on advertising, which means subscription stuff picks up. And before you know it, the whole thing works. So that's what lies ahead. You've gone through all the tough times. Well, we all have. What lies ahead should be good. And as Dan said, we all have to be much more careful about adding people because people can be replaced by efficient processes with AI. Well, Jason, you and I were talking about this the other day. I mean, It's like, okay, the world is changing fast. But if I was that family office group, what would be the right allocation for this point in the cycle? Well, as Dan said, it's a reasonable chunk of crypto. Most family offices I see start at like 1% and end up at 20% over a cycle. So I think somewhere 10% plus works well. You want to be heavily technology because technology is in a secular bull market. You can probably own bonds finally for a bit, make a bit of money there. It's so straightforward to do. You can get your technology investment. The NASDAQ has been producing 17% returns annually since 2011. I mean, that's huge. While the S&P does 8%. So, I mean, Bitcoin's at 147%. So it's a whole different game. But yeah, I mean, I would just be growth orientated, all in on risk. That's what it should be. What Dan has raised the point is fascinating because these big family offices are the complete opposite. They are super risk adverse. And you're like, and this is the reflexive thing that Dan talks about as well, is these guys are all going to end the cycle over their ski tips long again. That's how it always works, right? They're just not there yet. Generally, every time I've sold, it's been a mistake. And actually what you should do is look forward to the bear markets and add to them. Really, I mean, I first bought Bitcoin at 200. If I'd have just kept that position, I'd have been much richer. It's stupid, right? But you get absorbed by this cycle mentality. Now, by all means, de-risk a bit, take some lifestyle chips off the table, do something, but this trade is much bigger than a cycle. And you think you're going to sell at the high and buy at the low, you've got another thing coming. You won't.
Raoul Pal presents a compelling case for an upcoming liquidity surge that could have a major impact on crypto markets. He underscores the importance of understanding macroeconomic factors and their influence on asset prices. We'd love to hear your thoughts. How do you think increased global liquidity might affect your investment strategy? Do you agree with Pal's assessment that we're entering a new era of technological and financial innovation? For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.